Traders from around the world, what's going on? It's Ricky Cadden back again with another free Friday stock review from Real Life Trading Australia. Hope you guys are doing absolutely sensationally splendid this Friday, getting ready for the weekend. Guys, there has been some phenomenal moves happening at Real Life Trading. If you are not part of Real Life Trading, click the link in the description below, get signed up. Go to reallifetrading.com.au. You are missing out on tons and tons of value. I'll show you what trades we've been getting into. But first and foremost, guys, let's talk about the SPY. Now, we did get a really nice black candle gapping down, which is a retest gap, and you can see we are getting a little bit of a spinning top candle happening right now. We've got interesting increasing volume as we are going lower. The market does, I can argue that this does look like we are starting to double top out. I have been mentioning we're going to trade sideways, guys, and I still do think and believe that we are going to have some sort of pullback at some point. If we take a look at the RSI, you can also see, even though we came back up to, the relative highs, we actually have been creating some lower highs on the RSI, which a lot of you who do use the RSI would know this as divergence. So we are actually looking a little bit weak in the markets right now. If you take a look at the EMinis, you can see we are starting to break down just a little bit. You take a look at the 30-minute chart. We are starting to create some really nice lower highs and some lower lows. We did come back down to a support level. However, if this level does break, I could see us coming back down to around, 41.40. That would be the next level. And then below that, guys, all the way down here at around 40.50, 40.60. So there could be a little bit of bearishness still left to go in the markets. You can see we are forming, this nice little head and shoulder-ish pattern on the EMinis. If you take a look at the Qs as well, though, the Qs is actually not holding up too strong. It actually looks a little bit bearish. We had a pretty strong gap down. It was a gap and go on the Qs. We also created a lower high. And remember, guys, this does, the QQQ is the ETF that tracks the NASDAQ. So a lot of the tech stocks getting slammed right now. We are getting some lower highs. A nice little pullback down to the 100. That would bring us back down to the neckline of this cute little double bottom. However, given that this is a gap and go, I'm a little bit more bearish than, neutral to bullish on this particular trade. So I would most likely it would possibly come down to about the 200 simple moving average. That's what I would hope for. Although we can continue to trade sideways and just build that pressure on the Qs. Guys, first solar ticker symbol FSLR. You guys would have seen in my previous video that I did on Wednesday. I mentioned that we got into some $75 puts on First Solar, which means we are trying to make money as the stock goes lower. So that was back on this candle, this nice little high wave candle right here. We did get a gap and go yesterday, nice little cute little retest, and starting to trade a little bit lower. So that one is in the green for us at the moment, and hopefully we can hit our target around $73 or around $3.25 on the option price, more importantly. And this is our favorite, Wkhs. Guys, check this out for a trade setup. So we set this one up just a few days ago. If I just go to our official swing trade journal, this was posted. I posted this, the new swing trade on Wkhs, on the 28th of May. And this was the trade setup. We worked at that particular point. We were trading higher, and I said we want to come back down, retest $9.25, and with a stop down below 780. Look to take this one higher. As you can see here, if I just zoom in a little bit more, we missed our entry on this bearish candle. You can see the low up here in this top left hand corner. On this bearish candle, the low was $9.27, but the very following day, $9.23. That's right, we got in by 2 pennies. And look at the volume that preceded that, guys. We ended up getting a nice little short squeeze. A lot of bears trapped on Wkhs right now. We just had a real phenomenal play right back up to the 100 simple moving average, which was also a previous level of resistance. And a lot of traders out there looking to taking their profits here. If I just type in here Wkhs and see who's making money, on this one, and you can see Page got 5.93R, nice little Momo trade. Andrew Chapman 4.9. Lots and lots of people here making their money. Shirley making quite a few gains. Bought 300 shares at 9.25, sold out 200 at 14.40. Well done, Shirley. Guys, you're missing out if you're not a part of real life trading. Get involved. There is tons and tons of trades that we do take. But right now, currently up, if you were still in this particular trade, guys, you would simply be up about 3.5 R on this trade, which would pay for almost an entire year of real life trading subscription. So get involved. I do hope to see you guys there. But moving forward, let's talk about the ASX 200 trading higher. We did mention this in the last review that we are still looking bullish, and we did get some nice little selling pressure yesterday. Really nice inverted hammer, but then we followed and proceeded with another bullish candle today. So the ASX 200 is still looking quite strong. So if you are trading the ASX, definitely stay long on a lot of your stocks. If there's some dip buying opportunities, looks okay. Obviously, you do want to sell into strength. If you look at the RSI, we are coming back into around the 70, which is the overbought stage. And at some point, we will have a small pullback, but be one with the trend, guys. The trend is still bullish. Here is Harvey Norman. Oh my gosh, Harvey Norman. Now, Harvey Norman, you can see we've got these phenomenal two hammer candles. Great volume as we went sideways here, and then boom, yeah, we ended up trading higher above that today. Not the most fantastic volume in the world. However, what I am anticipating and looking at on this one, guys, is this particular triple top pattern that we do have. And we do have a resistance level back here at around about $5.50. So what I would expect to happen on Harvey Norman is to trade up to $5.50 and actually get rejected. If we can get rejected, most likely pull back to around about the same point that we are right now. That would be where you would look for a buying opportunity, as long as the market isn't looking super bearish. But really nice retest gaps that have been occurring on the way down. I just do expect that to occur and create these nice little higher lows before we start to cruise on bullish. A2 Milk Company, ticker symbol A2M. Now, guys, I did mention in one of my last reviews that this was throwing in a phenomenal double bottom, and I was also talking about the RSI. You can see we are starting to creep on bullish here. If you take a look at the weekly chart is where it's at. Look at the two hammer candles that came in on the weekly chart. These nice little bearish trapping hammer candles. We've got the increasing volume. We're closing above on the weekly currently. I don't think this could be the exact bottom, but this is somewhere where you would be looking to at least, going in and pyramiding into a particular position. Whether or not you go in all in here, it's up to you. But it has a nice little double bottom retest of the neckline. But if you go in with your full risk on this particular trade, it should be okay with a nice little stop down below those hammer candles on the weekly chart. But make sure you guys do mitigate your risk on A2 Milk Company. Really nice retest, really nice consolidation, really nice volume. Looks fantastic. Here's BHP. Now BHP just trading within a range right now. If you are in some shares on BHP, which a lot of you guys are, I do know that that you would be looking at selling covered calls possibly at around $51. If you're looking to purchase shares somewhere around $45, or this particular support level right here, $45 looks like a really nice buying location. We did get a abandoned baby candlestick pattern right here. These two little gaps that have not been filled, and it was a bearish gap and go. So I would expect us to have some sort of pullback, possibly back down to at least the 100. But if we can get a pullback down to 45, definitely does look like a long. Crude oil. Now, I did mention that crude oil was going higher as we broke above this particular range, this key level of resistance. We did get the nice little increasing volume. I spoke about these hammer candles, and all of the things looks great. Right now, over the weekend, or at least over the next 24 hours, I do expect us to trade completely sideways and or possibly a little bit weaker. But gold I wish someone told me about this pullback that was going to happen. I have been speaking about it for a while in the trading room, and you can see we did pull back pretty much down to where this level was. And it was exactly what I anticipated to happen. So expect a little bit more of a sideways action, and follow good old Mr. Squigs on the way back up. And last but not least is the Aussie dollar. Now, the Aussie dollar, I have been mentioning that the Aussie dollar does look bearish. I have been mentioning that in the trading room. I was hoping that we'd trade sideways for a while, but I did mention, yeah, we're most likely going to break down possibly and just come back down to, a nice little buying location on that one. Alright guys, I'll be back next week with another free real life stock review just for you. If you guys have any requests, leave it in the comment section below. Have a fantastic weekend, and if you have any other questions, feel free to email me. I'll leave that in the description below as well. Alright guys, have a great weekend, and until next time, love life, live life, and trade it. You guys rock. Bye.